Welcome back to Dukascopy TV for the final part of a three-part series on Latin America. Today I have Juan Flores with me in the studio to have a look at Brazil's economy. Now, welcome back to the studio. So, looking at Brazil, they're hoping to regain strength. The finance minister is quite positive. Now, he said in 2013 we will reap what we have sown. He also said 2013 will be calmer with fewer measures because they've been done. Now, I know last year there was a 1% growth. They are hoping for 3%. What are you expecting?
So, most analysts coincide that last year's figure was quite disappointing. And there are two explanations that advance that Brazil, on the one hand, was under pressure because of the lower demand of commodities, and on the other hand, low figures of investment. Now, what the Brazilian government expects is that investment will recover, thanks in part through a fiscal stimulus that they have announced last year, and on the other hand, the fact that China has again shown signs of recovery, and that means that there will be higher demand of Brazilian commodities, minerals, and agriculture products.
And what type of risks and obstacles do you think Brazil's economy faces?
Well, there are many, but probably two of the most important risks are, on the one hand, the fact that foreign investment is still not confident about what is the plan that the government will pursue in the next years. So, for instance, the tax burden is still high. There are a lot of suits or problems between companies and tax authorities in Brazil, and the fact that consumers are not actually increasing their consumption despite low interest rates. So borrowing is not increasing, and therefore consumption has not had the growth rates that we have experienced in the past years.
And while you mentioned interest rates, Brazil's central bank cut the Selic interest rate by 5% in 2011 and 7.25% last year, which was actually a record low. What type of actions are you expecting from Brazil's central bank this year?
There is a fact in that inflation has increased in the last year, and therefore the scope for further lowering interest rates has been reduced. What we have to see is how the exchange rate will react to the changes to this fiscal stimulus and to increases in investment. And if it increases, if it appreciates, then there is some scope for further interest rate cuts. However, if inflation continues to be such a risk, the central bank may want to decide to keep interest rates at that level.
And finally, there is a risk of Brazil's high dependence on commodities. Can you tell me more about this?
Yes, so Brazil has actually two motors of growth. On the one hand, internal consumption. On the other hand, commodities exports. And commodities prices cannot have the same increase as they had experienced in the last years. So the Brazilian economy is still highly dependent on the behavior of these prices, and therefore, if we see that these prices do not behave in a favorable way, this still is a big risk for the economic growth of Brazil in the next years.
Thank you very much for partaking on this three-part series on Latin America.
Thank you.
And thank you for watching Dukascopy TV. Now do stay tuned for more economic analysis and Forex updates, but for now, goodbye.